Why, hello, everyone. It's December 19th and the state of Vermont. I'm sure everyone was snowed in recently, but you can still work from home a lot of times with a lot of the government agencies in Vermont. And they did get out their withholding guidance for 2023. So it's ready. So I read it and I programmed it in the payroll and Google Sheets application. The easiest, cheapest, coolest payroll application to run your small business ever created. That's what I say. That's my advertising because it just is. And it's in a Google Sheet, and you get it for $100 and run your small business payroll or create pay stubs or do whatever you want for over 50 states and the District of Columbia. So anyway, we're going to go over Vermont today. My alma mater, I went to the University of Vermont. Love Vermont. Vermont's my favorite New England state. So what did they do? Well, they upped the thresholds a little bit for cost of living adjustments and inflation and such. So your take-home pay will be slightly higher, slightly, not much, but slightly. They didn't change the tax rates, but they changed the thresholds. Like the first 3,500, if you're single, doesn't get taxed. Last year it was 3,250. So they raised this a little bit to give you a little bit of break on the progressive rate structure. The only thing you need is to fill out how many W-4 VT allowances the employee has, and also to choose their status over here in the state filing status area. If you start typing in Vermont, you see all the Vermont. There's civil union joint, civil union separate. First state to offer civil unions, if I remember correctly. That happened like right around when I was going to school back in 97 or something. It's right around that time. Anyway, so Vermont, what do you do? How do you calculate the tax? Well, you're going to annualize the wages. You take the gross wages for the period. You're going to multiply it by how many pay periods are in the year. So we're working with a weekly version right now. I believe it's a sample I'm in. It's a weekly version, but I know that someone who I sold this to in Vermont is going to have biweekly. So if you change this to biweekly here, and how you start setting this file up for a different pay period, you just change the number of pay periods in the year. It's going to be 26 now instead of 52 because the paychecks every 2 weeks. Change all that and everything's going to change. It's kind of cool because we could just sample what the paycheck's going to be. But when you change that, that's related to how many pay periods in the year. So when I said this formula about like you multiply the gross wages from the paycheck, the current paycheck, times the number of pay periods in the year, that's how you get the annualized wages, which you expect the person to make throughout the year. So the wages just dropped dramatically because we just went from a weekly to a biweekly payer. You saw it happen right here in front of you throughout the video. So you do that, and then you subtract out, because now you've annualized the wages and you're taking a guess at what the person's going to make for the year. You then subtract out the number of allowances that they claimed here on their VT4 times a new number. The standard allowance amount went up. What did it go up to? It went up to 4,850, I believe, and that's located here in the matrix sheet. Under Vermont annual exemption amount has been updated for 2023. It is now $4,850. So that comes out of your taxable base in the very beginning, times the number of allowances you claim there. Once you've done that, you get this adjusted base. That's what this 34 is, 34K. Now you just put the rate formula in here. It's a nested if formula. It's kind of complicated looking. I won't go through the inner details of it, but you can see it, how it works. And all that is that's just this converted into one cell, is it puts the amount of wages into the proper pocket and multiplies it by the proper percentage. So you can see that they have a range in rate from 3.35% all the way up to 8.75% if you're making more than $230,000 a year or so as single, 289 as married. So that's what these formulas do here, the single or married formula, and then you pick which one they were based on their status that they chose. Or whether or not they're married, actually. You answer that here in the employee info sheet, whether or not they're married. That's what this question is for. If they were married, it would change. And this number here just changed. If you caught it changing and switched to this. All right, so that is how you calculate Vermont withholding on this check. If it was a biweekly check and it was $1,495, then the Vermont withholding would be $39.32. The federal withholding for 2023 would be $107 because I've already updated the federal rates for 2023 as well. We're way ahead of the game, and I thank Vermont for getting their publication out relatively quickly, extremely quickly after the federal publication 15 was finalized, also right around the 15th or 13th or something like that. So this stuff's effective 2023. This is accurate. Vermont, one of my favorite states. I will definitely go up there and check someone's paycheck because I make it to Vermont at least once a year. I've already made it there once this year, rollerbladed around campus. It was a good time, and I'm sure I'll make it up there again. I might even make it up there before the end of the year. I'm thinking of making a visit if they clear the roads up there, right? Which they do rather quickly. So no local tax, I believe, to worry about in Vermont, as none of these are going to show up here. So that's it. Vermont tax 2023 rates are updated. Payroll should be easy. We're making it so.